I'm about to jump into the stream.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody. Welcome back to another live stream here. We are back in the studio, and gold is still dropping. Lost its shine indeed, if you will. Welcome back, everybody, to the stream. We are here for another daily show. We do this Monday through Friday. If you guys are new to these, welcome. It's always a good time. We are taking a look at whatever's going on in the markets. We do market coverage, news. Today, by the way, we of course have the report coming out, unemployment numbers here from the United States, which should, unemployment claims. This is an important thing right now. I will say, over the time of my career as a trader, unemployment claims have come in and out of importance to some degree. When unemployment is very important right now, due to the Federal Reserve, it tends to get a little bit more focus, and then other times it is not so important. Right now, though, the Federal Reserve is very closely watching the jobs market and looking for some signs of relaxation there in the job market. The more they don't necessarily want to crash the job market, but they want it to cool off a little bit because it is a driver of inflation. More people getting involved in jobs, getting raises. As much as those things are good for the common person, the Federal Reserve is looking at it like, hey, that's going to cause prices to go up, and which is, of course, a problem that they're trying to solve. It's a convoluted thing, but hey, that's why we're here. We go through it together and try and do one thing at a time. Let's take a look at gold here. So gold at 1975 this morning, trading at support. Question is this support going to hold? And we'll see what's going on with that. Turn music down. Sorry about that, guys. I will say on the software side, it's a little bit hard to tell where the sound level is. It might have been a little bit high. I'm sorry for that. Welcome back, everybody. Got people in the chat. Hey, let me know where you guys tuning in from as we get started here. Question is gold going to hold this support? And what is pushing gold down so far here? Well, the big catalyst for that is, of course, the dollar strength. Vanessa, what's up? Good to see you, Vanessa. Vanessa, I shook hands with at our recent Atlanta event. Vanessa, I can't say enough how kind of your message that was. Vanessa, at our recent event, she thanked me for the streams in person. It was a really cool experience for me, Vanessa. I just want you to know that that was really nice of you. The way you said that the streams have been really helping you and reaching your goals towards consistency. It meant a lot, so I really appreciate that. Nick can't hear us. There's an echo. Is there an echo? Do you guys hear an echo? Let me know. Do you hear an echo? Let me make sure. You guys are tricking me out here. I want to make sure audio-wise we're okay. Is there an echo in the stream? Let me know, guys. I can't hear it. Okay, not anymore? Okay, cool. All right. That is the question. Will gold bounce from here? And, my opinion here, you guys know I was long gold at this area. If you've been watching the streams, I was long gold around 2010, right? I rallied, the price rallied. I was able to trail my stop, and I got stopped out for a profit. Then I re-entered in this area, and that one turned into a loss. So I no longer have any gold trades open on the long side. or short side. And I don't necessarily think I'm going to be buying gold at these levels. Is it a support level? Sure, yes. But I think that the strength, the uptrend momentum that we had seems to have kind of fallen apart from where I was looking to get involved. And so I'm waiting for price to kind of prove itself and start trending again before making a move. I mean, this is not this sort of market that I like to trade anymore, right? At this point, it was. We had momentum, pullbacks, opportunities. At this point, it is not, right? We're just trading sideways. We're choppy. We're indecisive. Okay, cool. Thank you guys for the quality. It's just bad quality sound. Is it bad quality sound? See, every time somebody says something like this, I have to go confirm or make sure that it is or it is not. So sorry for repeating myself. So yeah, the dollar, I can double check and make sure my mic is the correct one. Hold on. Speaker, mic. Yeah, it should be my right mic. Wait. No, it's bad mic. Hold on. Is this better? Can you guys hear me better now? Audio, Yeti, mic, bad mic. Okay, thank you. Good mic. Cool. Thank you, producers. Appreciate that. All right, should be better. Okay, sorry about that, guys. Yeah, that was that's my bad. Sometimes having all the devices, you guys know, if you've been on Zoom calls and stuff, sometimes it just like defaults to a different device for some reason, and I don't know why. Anyways, to answer the gold question, the thing that I have an issue with trying to be long gold right now is look at this dollar. This dollar is so strong. It just does not want to quit. And I have not been shorting the dollar despite being kind of bearish. I'm still pretty not interested in shorting the dollar when the price action looks like this. So let's break down the price action real quick on the dollar. So the reason I'm not looking to short the dollar is because look at what's happening. Every time that price pulls back, what we see here is support is just holding aggressively. Here's a new one that we just put in several hours ago here, right? Every time price makes a retreat off of the highs, buyers are stepping in and bidding up the dollar yet again. So for me, what this means is I can't be a seller in this market until we see the opposite effect. Once we start seeing breakouts, that's where I could be a seller of the dollar. But I've got to see strength to the contrary before I get any sort of confidence to try and short it. So this is DXY. We're looking at the dollar index right now. And this is why, guys, I am not shorting not longing the gold market, is because the dollar is just too strong right now. I'm waiting for signs of a dollar crack before I look to get short gold. I'm sorry, long gold again. It's a tongue twister. So something like that would look like this. Like if we were to see some sellers, real selling, come into the dollar, we need to crack this trend line. We need to crack support levels. But I'm not a counter trend trader. So what I want is I would like this to form. I don't care to be the first seller. I care to be selling in a downtrend, right? And it's hard to be the first seller because if you tried to sell first, here, you've been having a tough time trying to sell this dollar move. So I'm not looking to short the dollar when it price action wise looks very strong. Let's take a look at the euro against the dollar, which has been getting crushed recently. This one just looks bearish, right? There's nothing for me here to do. If I'm short biased on the dollar, but it looks so strong, I wait for strength to diminish and I look for weakness in the dollar. Why do you think this strength is short-lived? I'll give you my answer on that. The answer to that is that what is driving the dollar right now is the debt ceiling concerns, right? That's one of the primary pushes to the upside on the dollar. So when we see that, my opinion on the debt ceiling, and I went over this yesterday, is that the dollar strength that's occurring right now, pushing things like pound USD back to the lows on the 4-hour here. The reason the dollar is so short-term strong in my, but not necessarily longer term, is because the inflation story is still alive. The inflation numbers continue to come down and down and down. And I think that the NASDAQ is catching hold of that. Take a look at this. NASDAQ risk on 101 is flying, right? The S&P 500 now catching up.
And even the Russell, which has been the lagger of the indexes, some of you guys don't even know what the Russell is. If you're not familiar, the Russell is a much wider net look at the stock market. It doesn't just include the biggest ones. It includes all sorts of wide range number of stocks. It's even catching a little bit of a bid here. Now, it's not doing nearly as well as the NASDAQ, which is just a beast machine right now. But, you know, this, I think the market is catching on to the idea that, hey, the Fed is probably going to look like it is topping on its rate hike process. I don't personally think that we're going to see any more rate hikes. We'll see if that is right or wrong. We have a June meeting coming up, but we'll get into that soon. Guys, we've got 1 minute to go here on the news. Again, we are going to be watching to see if unemployment claims cause any stir. We got 45 seconds. Let's get our charts set up real quick. And while we do that, we'll roll our breaking news feed. Yes, there you go. Just a little fun banner there. So we are going to be watching. I'll put the NASDAQ up there just for fun. We just talked about it. See if there's any reaction there. Let's also put the dollar index top right for those of you guys watching that. We'll put gold bottom right here. So gold setting up there. And of course, we have to put in the euro as well. So here we go. We've got all of our charts set up. Let's see if unemployment claims cause any volatility here this morning. Again, dollar right, gold, euro, NASDAQ. Let's see if there's any movement here. All right, and numbers should be out. Not too much of a stir here. You've got the NASDAQ trading a little bit down and then back up. You got the dollar staying where it's at. Euro dollar down. Here's the NASDAQ tumbling a little bit. Dollar trading up now. Gold underneath the lows, guys. Look at this. Okay, we do have some volatility coming into the markets, a little bit of a delayed reaction, but unemployment numbers coming out at 242. This is a less than expected unemployment claim, which is, of course, showing minor strength in terms of the job market. So, of course, unemployment claims, the more unemployment claims that come out, the worse off the job market is. So, lower than expected job numbers, unemployment claims here this morning, causing the dollar to strengthen a little bit. While the NASDAQ shoots down and captures back those losses fairly quickly. Here's the euro trading down and the gold market hitting a fresh low at 1969.95. We are coming back into the 1960s here on the gold market. Let's have a closer look and see what's going on with the dollar here this morning. DXY again trading up. Look at this. There's your 15-minute chart, seeing some continued strength. And this is why, guys, when the market is in momentum, I do not try and short it, right? This has been a tough one to try and short. And there it goes. Dollar strength yet again, showing some strength here. Yeah. Nick's been hating on dollar yen when he's not in the market. What do you mean? What's wrong with dollar yen? Look at that. Dollar yen's super strong. I actually have a long trade on dollar yen, Trayvon. I'll show you. I've been long on dollar yen for a while, actually. I'm up. This is coming to fresh highs. For those of you guys who are in the Discord, dollar yen fresh highs. Yesterday we were floating 400 pips on dollar yen. At this point, we're probably floating even more. So dollar yen has been a monster for us. And this is not necessarily, this is mostly COT related. So I'll show you something cool here. So if I look at the COT report, part of the reason I'm long dollar yen is purely a yen short trade. And check this out. So yen shorts, right? 79% short ratio on the Japanese yen. The dollar still maintains a pretty hefty long positioning from institutional traders. So we're actually long dollar yen right now. And this is awesome because dollar yen is pushing to new highs here off the 4-hour, and the daily chart looks strong. Look at this, guys. Dollar yen. This is awesome. We're above 137.5 here. I thought we would actually see more reaction from this level. I'm not going to lie. So this is a pretty respectable move here on dollar yen. Appreciate you, Trayvon. What about GJ? Yeah. Let's see what's going on with GJ. GJ, man, I don't know if you guys saw my trade idea on GJ. It was awesome. The problem was it didn't give me any pullback to get in. So I got played on this. Well, I mean, I didn't take any trades. But that's exactly the problem. I was calling for a breakout here and we got it, but we never got any sort of pullback. So I was not able to get into this trade. However, look what's happening this morning. You've got GJ trading a little bit off the highs. It's possible that we could see a deeper retracement. That's something I'm paying attention to and on my watch list for sure right now. So we are already long dollar yen. Again, this was a trade alert shared inside of our Discord channel. I've been in this for a couple weeks. This is a longer term trade that I've got. So in my trade alerts, for those of you guys who are not in the Discord, I have two sections. I have the active trades, which are like short term, like 1 day to 14 days max kind of thing. And then I've got the position trades, which are longer term in nature and kind of swing trades on a longer term basis. And both of these are strategies I've used for several years. But again, if you guys want access to these trade alerts, here's what you can do. If you guys want access to the Discord channel, message in on our chat. We'll drop a link real quick to our live chat feature. Here's what you can do. If you guys want access to this, click the link that's being dropped in the chat here. So this message right here, send us a direct message. If you click chat now and you click, let's go VIP trading signals. If you guys want access to them, message one of our support reps. We got a couple of people in office right now, and they can hook you up with a huge discount. If you've been thinking about joining the Discord, come join the action. We've been killing it recently. And again, dollar Swiss is another trade I'm long on. So let's see if the dollar strength. Yeah, there we go. That is awesome. So again, both of these trades, the only one that's not working out for me on the longer term is this Euro Swiss. But let's see how we're doing on Euro Swiss. Is Euro Swiss coming back up? Nope, still flat. So this one's been really boring, but we're just under break even on that trade. But dollar yen and dollar Swiss both pulling the weight today. Look at that move. Dollar yen is flying high. Talk about US 30. Let's take a look at the Dow. So the Dow is, in my opinion, this is just my take on it. In terms of the indices, this one is the most boring to me. I know that a lot of Forex brokers, they have huge contract size on US 30. So US 30 is like, it moves just a little bit and it's like $400, right? But in actuality, the Dow, in my, not even in my opinion, just in terms of volatility, is the lowest when actually trading the percentage wise, right? So it tends to be very stable companies, right? You got like Walmart in there, Coca-Cola, like huge, stable companies. So it doesn't move nearly as much as something like the NASDAQ in actuality, which moves a lot in terms of percentage basis. So it's interesting, that dynamic though, when the Forex brokers that you can trade US 30 on, I'm always very careful with those. I don't trade US 30 or NAS 100 or SPX500 on a Forex broker because the contract sizes are huge. There's a reason why a lot of new traders really are like scarred by indices. It's because the Forex brokers that are out there, the contract sizes that you trade are like super big. So you can't even trade, like even a 0.01 lot size is like really big in terms of volatility on your account. So I personally am very careful with that stuff. So I don't trade on Forex brokers there. I trade on Webull, which is it's a US regulated stock and ETF brokerage that I use to trade these indices. If you guys are in the US, there is a link in the description if you're interested in trading these things. My opinion, check out the ETFs. There you can trade with very low volatility and without leverage. I mean, in my opinion, I stay away from leverage. I don't think you need it. If you're trading properly, I don't think you need a whole lot of leverage. I think that's a trap that a lot of retail traders tend to fall into, and they lose a lot of money because of it. Yeah, so NASDAQ 100 here, just pumping higher here and really strong. Question is S&P 500 doing the same? And it seems to be, right? You had this breakout. I mean, look at this regimented sell that was going on. Sell, pop to the upside, big breakout, and now stops clean at resistance. This is technical 101. The question will now be for the S&P traders, can we get a breakout of these resistance points? And if we do, I think we see the S&P make a rally for 4,200. I think that is very reasonable. And again, I've made some calls on gold. I am still bullish on gold, you guys. Regardless of this sell-off here today that we are seeing, a lot of traders probably wondering, oh my gosh, how low can this thing go? It could go lower, right? Momentum is favoring the sellers right now. But what I am looking for, I still think that this year we have room to break out through the highs and make a move up to 2,200 is what I've said. I think this year that is very possible. Why is that? Mostly fundamentals. And please remember, when I talk about these ideas, I am not always right. I am a trader. I'm not a crystal ball owner. So my thought process on the gold market is that when that dollar weakness shows back up, and I think that it is around the corner, I'm not looking to short it, but I'm waiting for those signs of weakness to start forming on the dollar. I think that gold has a serious potential to break back into the 2000s, but even past the previous highs. This is a serious sell-off that we're seeing here today, guys. And one thing that is, a question that I got on one of my recent videos is people said, Nick, why is gold selling off yet institutional money is so long gold? Well, here is the unattractive truth about trading. Even the pros are wrong sometimes. Even the professional traders out there, they're not 100% correct. Nobody is. The markets have some unexpected twists and turns. The old saying is markets are fickle, right? They're emotional. They suddenly changed ideas and things happen, especially like when you have a debt ceiling concern that suddenly arises that can cause all sorts of things, right? So I'm still bullish on gold. I still am looking for opportunities to get long gold, but I'm waiting for technicals to align. So institutional money here, guys, is at a 79% ratio. Institutional money is very long on gold. We have this is not me speculating. I'm not like, this is not a gut call. This is actual from the CFTC's requirements. Institutional traders, large speculators have to report to the CFTC their positions once a week. And we can see those positions through our software. So what we can see is long contracts are still very heavy at 266,000. Short contracts are at 70,000. The most recent change is some added longs and some added shorts. So not too much of interest there. Regardless, the overall positioning still remains 79% of the positions open that we are tracking are on the long side from the large speculators, the non-commercial traders that we track using our software. If you guys ever want access to this data, if you have the Edge Finder, you go to the Smart Money Tracker and you can keep up to date with what big money is doing through the CFTC's reporting. So how can you access this report? Well, what we're going to do now is, well, we've got to do something. So yesterday we gave away a copy for free. We gave two copies of this away for free. Today, though, if you missed that opportunity, here's what you can do. If you missed the giveaway or you just want to try it out, and we will be announcing those giveaways, by the way, here soon. We're going to drop a link in the chat to send a direct message. If you guys would like to try out the software for yourself for free, here's how you can do it. We got free trials available today. We are handing out free trials to a limited number of people. We can only do so many. We have an in-person staff. So when you message in, you're not talking to a robot, you're talking to a real person. If you'd like to try out the software for yourself, my team here will hook you up. So click this link that's being dropped in the chat. This is what it looks like. Click this, send us a direct message and just said Edge Finder trading software access and ask them for a free trial. And you can check out this data for yourself to see if that's something that would be useful to you. We have COT report data. We also have retail positioning data. So we have all sorts of stuff. And I want to make sure if you guys would like to try this tool out, we want people to try it because being transparent, we're a software company. We want to sell copies of our software, but we want you to try it. We want you to check it out and see if it's a fit for you. You guys see me using it every day in my trading. I genuinely have been seriously helped by this tool that I've worked with my team so hard to build for the last year plus. And I want more people to use it. So if you guys want access, there's the straightforward sales pitch. I want you to try it, see if it's a fit for you. Don't buy it unless you actually love it. So there's your chance to do it. There you go. Yeah, gold continues to push lower. Yeah, it's very interesting to see how that goes. The pros aren't wrong. I think they're just selectively exiting their long positions or holding a very long position in anticipation of a new higher high later in the year. Yeah, so Benjamin, see, I'm kind of with you on that. This is the thing about institutional money. When you guys are looking at the COT reports, you have to understand a lot of times big money is not looking for a payout. They're not day trading. Right? A lot of institutional money is swing trading, perhaps even longer term swing trading, or even investing. So the positioning here is, this is why when I look at COT data, I'm not using this to scalp the 5-minute chart, right? I'm using this as a confluence factor. And then I'm taking it with me when I go over to the chart. I'm saying, okay, well, I'm probably only going to look for longs on gold, but this chart looks terrible for longs. So what am I going to wait for? I'm going to wait for breaks to the upside. So if we do, in fact, start to see gold come back to life and break back in, I could see looking to try and take longs once something materializes. Does this make sense? Type yes in the chat if what I just said makes sense to you. Yeah. I'm using a free trial with the Edge Finder and I'm absolutely loving it. I'm glad to hear that. Hey, would you let the person that you're that you're working with, whoever is setting you up with a trial, again, we do trials on a one-by-one basis. We set you up with a real person so that you can ask your questions. Let them know that you're loving the trial, and I hope that you choose to keep your trial going for permanently with just getting access to the software. Okay, cool. Thank you guys for the yeses, letting us know. Yeah, cool. Guys, we're going to take a quick break. I'm going to come right back. I'm going to finish up my thoughts here on the gold and dollar market. We're going to come right back after this quick commercial break, thanking our sponsors who make this content possible for you guys to watch for free. Check it out.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
There you go, guys. There is another way that you can get access to our software tool for free. The way I like to think about that offer that you just saw on the screen there is that similar to like when you switch phone providers, sometimes they'll buy you a phone. If you switch brokers, they'll buy you an Edge Finder. That's the agreement that we've worked out. Again, if you want more information about that, direct message us. You can ask us for information about that 8cap partnership where you can get the Edge Finder paid for you so that you don't have to buy it. You get it for free. All you have to do is switch brokers. And 8cap is an amazing broker. So they're regulated. They're super awesome. So yeah, check it out. I wanted to talk a little bit, again, going off this dollar concept that we've been discussing here on today's stream. If price is able to break some of these lows, this is why, again, I'm not looking to go against this dollar. I think the dollar is on a freight train to the upside right now. I'm waiting for it to crack to the other side. Now, again, if it breaks out, this is why I'm not, trying to short the dollars, because dollar strength could push pound USD to break through support, and bearish price action just does not look like it wants to give yet. What I'd be looking for those of you who are asking, well, when is the time to look at the dollar a little closer? In my personal opinion, we need to see resistance fail. And so what I mean by that is that, okay, we're looking at the pound. For the pound traders out there, we need to see this trade come back into play. And I actually do think that the pound is a serious, chart to pay attention to, because the UK has super high inflation rates. The Bank of England has to continue raising rates, and yet the Federal Reserve is, I think, on its way out of raising rates. So there's a divergence there where higher interest rates for the UK could cause the pound to go up, and lower interest rates for the US could cause the dollar to weaken. So this is a trade that I think could be opportunistic, but only once price action actually shows signs of life to the upside. So I'd love to bring in today's guest. We have Marco in the building. He's been waiting patiently. We'll say hello to Marco. Hey, what's going on, Marco? Welcome back to the show.
Hello.
Marco, I need your help on something. We're looking at pound pairs today. What are your thoughts on the pound USD? If you'd like to share your screen, maybe a lower time frame perspective would be helpful today, as we see the dollar strength continue pushing some of these dollar pairs back to their extremes. What's your thoughts on USD pairs as a whole, but maybe start with pound USD?
Sure. So I do trade the pound. So let me take a look. Well, and I'll only do 1 hour. Can you see the screen?
Yep.
Okay,
we can see
great.
It, yes.
So for me, this one is range bound in this area right here. So I would like to see it break out to the upside or to the downside. So right now I'm being more patient, but I am seeing some potential. Overall, it is moving to the downside, looks like it, but it's just not giving me those big pushes that I used to see on the pound. So I want to see big moves. I don't want to see these longer consolidations and these longer pullbacks. So I'm just looking for established momentum, and I really want to see that large momentum for the pound.
Sure. And so give me a, Marco, in terms of price action, bull case, bear case. Show me, so because it seems like you're pretty agnostic right now. It's choppy, it's back and forth. You're agnostic to what price does. You're willing to sell if something arises. You're willing to buy. Is that right?
Exactly. So right now for me, it's in no man's land, basically.
Yeah.
So for me to be interested as a buyer, it would need to move away from this general level. So it would need to break this level and continue. So break and then continue, because most of the time it will just break and retrace back into the range, right? So I'm interested in a break of this level, and to sell, I would need to see it break this level and again give me some nice strong momentum. An example of some nice strong momentum for me would be, well, let's quickly try to find something. This would be an example. So this leg and this leg, that's what I'm looking for. That's kind
Marco,
of what I want to see.
Remind me too. So let's say it breaks to the downside. Are you selling the break itself, or are you looking to sell pullbacks? How are you playing those?
Yeah, so I'm looking to sell pullbacks.
Okay.
The way I trade is I wait for momentum and I wait for the candle to close solidly and to move away far away from the range, and then I look for it to pull back, give me a flag formation or a break and retest at the bottom right here, and then I just get in on a pending order. So I don't trade a retest of this whole level.
Gotcha. Okay. So you're looking basically for that quick break, quick retest, and just it should either continue quickly or you're sort of looking to get out.
Yeah, especially for the pound, because I found on this pair, if like the impulse looks like this, where you have blue candles, or it's not really moving with big candles, it usually doesn't continue. So I want to see consecutive blue or consecutive red candles move away from the range bound area. So especially on this pair, I need to see that nice big large push. But when it does push, it really continues. So when I see a move and I get in the trade, it usually banks some really, really nice percentage. Again, it has been slow for the last couple of weeks, even months, but that's how it works in Forex. We can have these long periods.
Right.
So yeah.
It seems like for me, and probably yourself too, Marco, the winners, that when they come very quickly, and they come like you catch something and it just runs and runs and runs, and then most of the time you're just either getting stopped out with small losses or just waiting for that next opportunity to form. So I definitely feel you there. I want to show you something too. As we have been talking about, the dollar continues to strengthen, and the gold market here on my screen is trading now at the lows. We've got 1966 printing here, which is crazy to see. You've got this big push here. We're back in the 1960s. And my thought process, I think last time we were speaking, I was telling you I was pretty bullish on gold. I got stopped out of a trade, but if I'm being honest, I'm feeling really good about my stop loss, because my stop was just below this market structure here. So this is a daily chart that we're looking at. Price came down to my level once. I entered a trade here. I trailed and I made money on that first trade. I tried to get back into the trade thinking that, hey, this support should hold, round number play around $2,000 an ounce. And we initially saw a little bit of reaction, but then price rolled over. But the reason I say I'm feeling good about my stop loss is because I stopped out here and I haven't been holding that back. So the thing I want to talk about here, and one thing, Marco and I are talking about in terms of trading, like a lot of times it's a lot of waiting. It's hard sometimes to find lots and lots of setups. And sometimes you do and you stop out. One thing I want to stress is that it's not always about your winners as a trader. In fact, it's sometimes about your losers and keeping them tamed, under control, so that you
Mhm.
can make room in the account to experience drawdowns for when that good opportunity comes along. So, I stopped out here, and I haven't entered again because, again, I think we lost that momentum on gold, at least for now, to the upside. It seems like sellers are just very, very strong here, with that dollar market just being, red hot, it seems. Here's a look also at the dollar here, which continues to drive higher. You can see it's almost like as soon as it broke away from this consolidation, the dollar train has just not stopped. So for me, I
Mhm.
am, from a fundamental perspective, still bearish on the dollar. But this is the trouble with fundamentals, right? Fundamentals are an excellent way to add confluence to your trading for some traders. Some people don't use them. I use them a lot. It's just personal preference. I've always, I'd like to know the story behind the markets to see if I think the trend is likely to continue or not. But one thing I want to point out here, Marco, is that, the trend here to the upside is rock solid. It's so strong. And even though fundamentally I don't agree with it, I'm not going to let that fundamental bias blind me from what the chart is telling me, which is this super strong upward trend. So, any other dollar crosses? What are you looking at here today in terms of, do you have any
Yep.
trades open?
Sure. Mhm.
Anything that you're looking at dollar? Feel free to
Mhm.
share whatever you're looking at.
Sure. And just to say one thing, so about us waiting for the winners. I know for me, I have 2 or 3 months that are winning months, big winning months. Rest of the months are slow, mostly losses. So I
Yeah.
rely as a swing trader on the 2 to 3 months to pay for all of the other, let's say, crappy months. So it's really a waiting game, at least for me. Maybe on the lower time frames, it's a bit more action in the month. But for me, I just wait for a really long time, especially like I said, on the pound, I haven't had a good trade for a few months now. But I know one is coming, and that's why I trade different pairs. So for the other dollar crosses, I really like the euro and the US dollar. So what I like about it is the price action that is right here. So I noticed a pattern where this pair likes to descend, just barely breaks the major lows, and then gives me a nice push, gives me an entry, and continues trending down. And I'm seeing that exact pattern right here. So price went down, struggled, paused a bit, then broke down, struggled again, but now we're getting that momentum. So if this closes like it is closing now, if it doesn't print a huge wick, I'm 100% looking for a flag here, or I'm looking for a break and the retest, or I'm looking for this to continue going down. But I really, really like this pattern, and most of the time, this sort of price action does continue trending to the downside. And I can see, so it's 3 more minutes until it closes, and I think it's gonna close like this. So yeah, this pair is 100% on my watch list. Another pair I trade is the Aussie US dollar, which is breaking out from a range. For me personally, I don't see any high probability pattern forming as of yet. So maybe this momentum will continue. If it does, I would look to sell, but I need to see 2 or 3 consecutive red candles going down to give me that conviction that the price has moved away from the range. Again, that doesn't have to happen. We can also reverse. If that happens, I will look to buy. And the last one was, of course, the pound, where I am as well being more patient because I'm not seeing that strong momentum as I mentioned. So EU
Sure.
is very interesting to me right now.
Yeah. Yeah, I mean, Euro USD, I would say, is of the dollar crosses, it seems to be one of the most waterfalling pairs, right? It's just falling down, it just keeps tumbling. And I'm with you. I mean, I love to trade charts like this. Of course, in the case of gold, I can already hear my critics saying, "What about gold? It's trickling down, and you were long," which is true. And that's a chart that I don't want to be long on, right? So it kind of goes with that. And also, again, to follow up with your point, Marco, someone in the audience, Patrick here says, "Great job, Marco. You're a real trader." I want to just reiterate the concept that you said about having just a couple winning months when you're trading. For the way that I think we relate in this way, bigger moves, like you have a wider risk to reward. Many new traders are very, very turned away by the idea of not winning very often, But when you do have those big winners, they're very, very meaningful. So that's just the reality, is that it comes down to, same for me, you know, over the years that I've been doing this, most of my profits come from select incredible trades. I'm a trailing stop trader. So what that might mean is there are occasionally winners that for me could go to 10R, and a 10R trade can be, you know, month or even year or quarter changing events. So it's sometimes just about setting up your charts, waiting for those setups, and being so patient to try and find those events where you're on the right side of it and you just hold on for dear life, and it just keeps going and going. Also, I do want to just say we are going to be announcing here the winner, Marco, and to everybody else who may have missed it. Yesterday we announced that we're going to be giving away 2 copies of our software for free today. I have those winners announced or ready to be announced. So I'm going to go ahead and put those on. I'm going to tell you guys who they are. So I don't want to put their emails because I don't want anybody to harass these people. Suleiman Jr. is one person, and Christian Trades. Both of you guys are our Edge Finder winners for the giveaway. If you're on the stream right now, reach out. And if not, we'll be emailing you anyways to let you know that you have won. Congrats. And to everybody who didn't win, you can still get a trial today. We talked about it earlier. If you guys want to check out our software, if you want to play around with it for free, no strings attached, check out our trial. We're going to drop a link in the chat. Here's the link in the chat right now. If you guys want to ask for a trial, in case you missed the giveaway, you could still get in on that. Just check it out for yourself here, and click that link to direct message us. Ask us for a trial. So yeah, Marco, you know, the charts, like we were saying, when you have this dollar strength and it just drives this thing one way, I would generally agree with your idea there on the euro. For me, you know, I'm a little bit, I think I trade mostly on the 4-hour chart. So I think I'm a little higher time frame of a trader than yourself. I think my take on this would be, if I can get a pullback on this chart to something like this 50% retracement, which comes up to 1.0845, that would be probably where I'm a little bit interested myself. But again, it seems far-fetched. The dollar is so strong here. It just keeps pushing this thing lower. So I'll just have to react. I like waiting for just a retest of structure like this. Oftentimes we do see charts. Yeah, like it just tends to retest an area like this a couple times before, you know, continues the trend. So I'll be looking out for that on the euro. So I think we're both there on euro ideas. I think that has a lot. What about I know you don't trade gold, but any analysis you could share with us on gold? Just, I know you won't you don't trade it, but what's the chart
sure, I
like
can take a look.
Yeah,
for sure. So gold right now is looking good. Most of the time that I open gold, it usually looks choppy like this or like this. But right now I'm liking this price action. It's kind of calming down. And it's also forming a similar pattern that I like to trade on the euro pairs, which is a push down and a descending and then another impulse going down. So to be honest, I'm bearish on this one. If I was trading it live, I would look for this to push a bit more. Give me something like this leg. I really like these 4 consecutive red candles, and then I would be looking to sell. So my bias or the probabilities are telling me that this will most likely continue going down. And I like the price action. Usually when the price action cleans up a bit, that means the moves will be more sustained, the pullbacks will be smaller, and possibly there is more percentage to make. So you can definitely spot, you know this as well, you can definitely spot when the price is cleaner or more wicky and range bound.
Yeah, no, it's and that's the thing. I was long biased on gold, but one thing that we also discussed here is that, you know, you lose often when you try and go for the bigger moves. And this is just another one in the books for me where I was trying for a bigger move on gold. I made some money on my first attempt, but once it failed at this 2010 level, I just bailed on it. And I think that again, going off of that concept of we're waiting for the big winners, it's also very important that in order to wait, you have to survive until they show up again, right? To survive, you have to lose very small when you do lose, so that you're not, you know, wiped out by some sort of a single off drawdown. So the position that I took was very small. So, you stop out, it's not destructive to the account. I also want to just quickly take a look at the indices as well. The S&P 500 pulling back, rejecting right now. This upper limit around 4170 seems to be giving the market here a bit of trouble. I've mentioned that for the S&P 500, sort of on the higher time frames, some sort of significant breakout could be interesting for pullback buys, but we're still kind of stuck. The one that I've paid attention to, and I'd love to see your take on, I like the NASDAQ. Any pullbacks in the NASDAQ, I'm looking for opportunities to get long on this index myself. What's your take on the NASDAQ? What do you have?
Sure.
Again, I know you don't trade it, but yeah.
Yeah, I mean, price action is price action, so I'm sure I'll see something. Yeah, I'm liking this. I mean, the price action looks much cleaner. I used to look at this one as well, and it used to be as wiki as gold and as an unpredictable like here. But right now, again, we're getting some cleaner moves, some sustained bullish candles. So my bias is to go long. I don't like how we broke the high here. Retrace broke the high, retraced again. So on this 1 hour time frame, I would expect a correction. But if the momentum manages to continue and if we get more consecutive blue candles, well, then I would be a buyer in this market.
Sure. Yeah, no, I think the NASDAQ is just, it's very, very strong right now. And, when you pull apart its components, of course, NASDAQ is comprised a lot of heavy tech stocks like Google and Amazon and Apple and, big names like that drive and Meta, of course, big names like that drive the NASDAQ higher when they have good earnings. So if we just take a quick look under the hood, you see Google just having an impressive run. You've got Meta. These are the things that, when you trade, a lot of you guys who are in the audience, if you guys trade indices, I would encourage you, go take a look at the underlying components to those indices. You've got to understand, even if you don't trade stocks themselves, which I'm not a big stock trader, but I love trading the indexes. One thing that I personally love about the indexes is that you're getting access to, you're buying profitable entities, so they tend to long-term go up. So there's that nice upward bias to them. But then also you get the diversification effect of buying 100 stocks at once in an index instead of putting all of your eggs in one basket. Buying Google, and if Google has a terrible quarter and you're down 40%, that's why I love trading the indices. Of course, you could still get hurt on the indices, and but anyways, I like the indexes. My personal opinion on the NASDAQ, similar to yourself, I do think that we have room to pull back. Yesterday's move was very, very strong. And if it does pull back, I think there may be opportunities for people who may have missed out on that first run to see, opportunity there. So I like it long. I'll be looking out for this. This is, of course, on the COT data. It's of the indices, the NASDAQ is the most heavily bought, which you would expect, seeing it rise so dramatically compared to the others. So it's an interesting one to watch. The NASDAQ is very strong right now. Marco, thank you for coming on the show. I think we're probably about to wrap up here. Before we go, though, I do want to encourage you guys, go check out Marco. If you liked his price action approach, he's a very technical trader, which I know a lot of you guys love to learn from technical traders, as well as, my channel where we do a mix of fundamentals and technicals. Make sure to go check out Marco. He's got his own YouTube channel. We've got it dropped in the chat here. Go find Marco, subscribe to him, Marco's Trading Journey on YouTube. Marco, thank you for coming on the show as always, man.
Thank you very much. Thank you very much, and see you next week.
See you next week. Yeah. Again, guys, as always, when we bring on guests, we bring on people that we think are great people to bring on for a reason, right? We don't just bring on anybody to the show. We don't bring on hype people. We try and bring on what we believe to be serious traders doing their thing. And you heard it directly from Marco, talking about losing streaks and what real trading looks like. I really appreciate people like Marco and the rest of our guests that come on the show who speak reality about this stuff. If you love our show, like I love our show, of course I'm on it, but I enjoy having guests on. I think it's a really cool thing, and I enjoy doing this every single day. Make sure to hit that thumbs up button if you enjoyed today's show, subscribe, and turn on notifications so that you can come to our next one, and have a great day. We'll see you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles. keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the Edge Finder completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.